Good morning, guys. Welcome back. Today, we're going to talk about another stock that we actually picked among the small caps. It's interesting. And please, I encourage you to actually like and share our video and to subscribe to the channel. We're going to have many more video in the next few weeks. Um, Sphere is the company that we're going to discuss is called Sphere. It's a sort of spin-off, comes from Madison Garden, MSGE. The ticker of Sphere is SPHR. And, it's a very interesting stock because it's a company in which you find a huge venue that is actually being built as we speak in Vegas, right behind the Venetian Hotel, right on the street of Vegas, which is the most central area of the city. What is interesting that Sphere is actually, as we're gonna see, coming to a conclusion now. So the work is getting finished. It's been delayed a few times, so it's presumably they're gonna open in September. But the opening has been postponed a few times. But this time seems different because they actually have some show where they already had some pre-sales. Is one of the biggest sphere, as the name of the world. It's a special sphere with many sort of LED screen all over. So it's kind of like interesting, futuristic, and crazy Vegas looking. What we can actually see, by digging into the company, is that the company that got Sphere is also has some other asset, and amongst these, some of them are quite liquid because they got cash. They got some cash coming from a sale of a company. They have more than 200 million self cash. Then they have some other asset that we're going to discuss. And by the time you look at the asset valuation, you look at the price you're actually paying for Sphere is much, much, much lower than the construction cost itself. Roughly, that we're going to actually dig into the numbers, but roughly you're going to see that you're going to pay cents on dollars versus the price that they actually paid to build. They actually paid 2.3 billion to build, still actually ongoing, and you probably can get these things for less than $300 million. So obviously, we are discuss why that happens, why the market is taking so negatively, and which are the pros, which are the cons, and please stick with us that we're gonna dig into this. Cool. So after this, we're gonna go and Sakib is gonna say something about Sphere, and I'm gonna highlight the investment thesis. He's gonna go through the numbers. Probably we can have a small a screenshot of the number itself. That is very easy to. We already have it. It's actually in the things, and then I'm gonna express one part of the risk, and Sakib's gonna get in and say, yeah, and this is the other part, I think, also of the risk. Okay, probably I'm gonna talk about the Dolan family, and Sakib's gonna talk about the London Sphere and the fact that actually EBIT, even if it's been forecast, is not probably it's just a forecast. It's not really actual number. And then we're gonna speak about how to neutralize this risk, which is the only way. Is actually, well, there's many other ways, but probably the good way here is to take a smaller position in the portfolio until things are no more clear. And yeah, that's it. So in 10 minutes we're gonna go discuss that. It's very easy stuff. So guys, let's just dig in, okay? That as a company, what we do, we have different kind of approach. One approach is to look at the asset value. That approach is to look at the earning power value, and then eventually to look at the moat. Now, we cannot prove that Sphere has a moat or anything like that because obviously it's not even a business that's started. So what we trying to do in this valuation is trying to assess the asset value. And we looked at the asset value is actually much lower than the one that we're paying on eventually by buying the stock. So we have a potential really huge difference between what is the value the stock is going for and what should be the actual value, at least from the asset perspective. Okay. Then we can also dig into a bit what could be the forecast earnings, because obviously there's no real earnings because the business didn't start yet. And then the risk. So Sakib, please introduce a bit Sphere more deeply, and by showing the numbers, you can actually show why industrial valuation Sphere is much it's much more valuable than the stock price.
Okay. Okay. So let me start with a bit of like what our investment thesis is. Sphere, a $2.3 billion project, is currently priced at a significant low level. We are like right now we are paying like 575 million only for that project, and the investment thesis basically rests on the fact that we are confident that the required earnings to validate the current market price of Sphere can easily be exceeded in the future, and because the earnings that the market right now is projecting are close to like 38 million in EBIT only. And if in comparison we look at what the Dolan family is looking for only the naming rights, those amount to almost like $50 million. So the current earnings that the market is projecting are are like very low, and this in turn like turns the project into a very um, a lucrative opportunity with substantial returns in the future. So let me go through a bit of the numbers. So as Antonio said, right now the Sphere company, the company, like after the spin-off, it held mainly three assets. One was a Tau Group, which has been sold, and they are expected to net like 300 million from that sale. The other two assets that they have is MSGN and Sphere, the project itself. So before I dig further into the calculation and the numbers, let me discuss a bit about MSGN. MSGN is the legacy network business. They have a streaming business. They have two sports channels, and it's a legacy network channel, a cable operations, the radio services, and stuff like that. If we look at the revenue for Q1 of 2023 for MSGN, it was 161 million compared to 167 million the same quarter last year. It's not a big drop, something like 3-4% maybe. But when we move towards the operating income of MSGN, operating income for Q1 2023 was 10.4 million compared to 46 million in the same quarter last year. And the drop is basically because of the increase in SG&M, and this shows how tough MSGN has, like how tough it has been for them to sell their services, and the legacy network business is in a downfall. Legacy network, the MSGN, has a loan of $869 million, which is due in 2024. We do expect a refinancing of that loan, but even with that, uh, it seems tough for them to pay the loan based on a 10-11 million of operating income per quarter. So the other important thing to highlight here is that that loan is a non-recourse one. The debt holders will only have a claim on the assets of MSGN and not the whole company. So the sensible thing to do here, and what conservatism asks us to do, is to assume that MSGN will have no value. We can suppose a zero value or for MSGN. Like now we can move forward. We are assuming no value of MSGN. So now the value of Sapphire is basically what the project is, and that's it. They've already sold Tau Group. So now Sapphire company holds Sapphire project and a 33% stake in MSGE, which is the new spun-off company, the Madison Square Gardens Entertainment Corp. The 33% in that, let's say, would take a 15% discount on the current market prices of MSG, because the prices can go up or down, and 15% is a big discount on the current prices. Even then, a 33% of MSG is worth around $566 million. If you take that out from the current market cap of Sapphire, we are left with basically what the value of the project should be. After that, we should adjust some cash that Sapphire holds. Sapphire holds around 200 million of cash. We can conservatively assume that they can spend another 100 million on the construction project, and after that, they will be left with 100 million almost in cash. And then they are expected to receive around 300 million from the Tau sale. We could adjust that, and then the term loan on this real project, which is around 275 million. If we adjust all of that, we get the total price for Sapphire, which we are paying right now. It's 575 million almost, which translates into $16.55 a share. Uh, that's the price that we are paying for Sapphire right now. Guys, remember, Sphere costs around $2.3 billion, and we are paying 575 million only. Even then, yes, the 2.3 million is a step up cost because the initial forecasted price for Sphere, the initial expected cost was around 1.3 billion. Even compared to that, it's a 56% discount. The 575 million we are paying for it right now. So that's what we are paying for it right now. If we move further to assume, to try to calculate what the Sphere project should be worth, we need a conservative estimate of the earnings. Now we can do that two ways. Basically, Sphere is expected to host the first party events, which can include movies, concerts, and a host of events. Then they can host third party events, similarly concerts, movies, and stuff like that. Then they are expected to get some revenue from the food and beverages that they will sell. Then they can get revenue from some of the naming rights. Now, remember, the naming rights are like basically of two types. One is for the arena, the naming rights for arena, like T-Mobile Arena. T-Mobile is the arena naming partner for that project. But there are other naming rights which are basically in the building. Like some lounges will be named after some company; they will pay for it, and it's the same deal. The naming rights, the non-arena naming rights, was a deal that JP Morgan did with Madison Square Garden back in 2010, I guess, and it was worth 30 million a year. And it's been like 13 years now, and MSG is looking to sell the arena naming rights, which are normally worth way more than the non-arena naming rights. So even if you just look at that, if they can get like 40-50 million out of the naming rights, the 38 million the market is anticipating right now is just too low. It's too low. But given that the Sphere has no other comparable in the whole world, Sphere has no earnings history. The EBIT estimates, the revenue estimates, they are just assumption, and basically only the estimates we can do on our own, and or we can rely on the sell side for it. So basically, the sell side proposing is predicting an EBIT of around $59 million for 2024 for the first full year of the project. I believe that this EBIT this already covers the discount because of its nature, because of its uniqueness, the discount because of its no earning history, and the discount of because of its expected because of its increase in cost, which is almost like $1 billion.
Yeah.
But still, I think like in the name of conservatism, let's just apply a 20% discount on that. So 59 million, we apply a 20% discount on that, we get an EBIT of around $47.3 million for the first full year of Sphere. So even after all of that discount, 47 million is the EBIT that we get. And to perform the calculations, we would need to assume an EBIT multiple of 15. Uh, Seems reasonable given the nature of the project, given that there is no comparable for this project in the whole world. So it will trade at a significant premium compared to the rest of the market, compared to its earnings. So 15 times EBIT multiple is something that we can safely assume. We don't have any issue with that.
Yeah, I feel quite compelled to the 15 EBIT because it's true that EBIT that we're using is only forecasted, but it's extremely conservative. I saw some buy side giving 1 billion revenue at 200 million, 150, 200 billion, 200 million EBIT. Now, I know that might sound crazy, but I know how much people really want to spend in Vegas when they're there. And I saw some calculations on the previous, I think it was JP Morgan business plan or some other business plan for the constructions of Sphere. And it's pretty easy to look at $50-$60 ticket in even only for the cinema things like that, and be semi full. Also, what I think, if I put myself into the mind of the company that built it, I really think that it's something that even just supposed to cost 1.6, 1.3 billion. I don't think they would have done it if they would have believed that anything between 30 to 40 billion EBIT. I think they really believe for a reason that they're gonna be more profit. Now, of course, you can actually question that there need to be execution, that there is all the risk, but don't forget these people. That's what they do. The Madison Square Garden and the company itself has a big history of this. Now, the Dolan family is well known for, especially for this entertainment type of business. So it's not that they jump outside the area of competence. Um, and so now, yeah, apart this part, I think what is important to understand is the risk, what the market is actually pricing, why the market is pricing like this, and what we see different as the risk. And I think I'm going to talk about the first part of this. Now I'd like to talk about the other part. But I think that as a value investor, what we have understood is that you know the kind of we don't have the ability of governance when we buy the company on the stock market unless we know an activist, and we go with a bigger sort of stake and try to have a member in the board and change things. So and we don't do this, or at least we didn't do it in the past few months or years. So the main thing is understanding the quality of the management, and beside the quality of the management, also the track record of the manager, and if the management is shareholder friendly. And what I mean by that, if they have a track record or the ability of the intention to a certain point give money back to the shareholder. You can have the best deal in the world, you can have such a low undervalued stock, but if there is no the willingness of the management to have you some part of this money, you're not gonna get anything. And we saw plenty of situations. So understanding the frame of mind of the management, their generosity or the ability to actually give back money to shareholder is important. I think that is the problem. I think this is the biggest issue. I don't think Dolan family is being seen as a selfish family. They only want to do their own business. They have the majority of course, vote in the company. They can do whatever they want. And in the past, they've been sort of not very generous or very transparent towards minority shareholders. If we can recall, for example, we can recall later on some example of actual litigations that then end up with the settlement with the same family and some other shareholder and those shareholder and the minority shareholder in other company and of the Dolan family. And also, I think it's not clear. It's not clear the intention of the management to give money back, when they're going to give money back, and how. And we've seen, for example, a lot of critics towards the management also in the Madison Square Garden about the compensation that they have on the stock compensation, the compensation of the management, which is probably one of the highest, in the industry. On top of that, there is the issue that you're going to speak about of London and the sphere in London, and if eventually, these cash flow could be actually used to take that, or to actually use to build the new venue. When they're going to get the money back to the shareholder. I think this is the issue. And there is also another thing, is that when you do the calculation, and then I'd like to speak about maybe detail, but when you do the calculation of the asset value, you need to assume, to make it really a compelling deal, that because the MSGN loan is not recurring, that you can value it at zero the company. But we know very well that probably Dolan family does not want to lose this business, and you do anything to actually keep it. That means that actually that loan will have to be honored in order to actually keep the business. And some people probably have an issue that they don't think Dolan family is willing to let this business go, and the 800 million will actually wait. Loan, they will actually wait on the valuation. What we're calculating, that I don't know if you mentioned or that we calculated just the small debt that they have of 275 million. But if you add the other 800 million, that theoretically can be no recurring, but practically would it be or not? That's the issue. Then we're gonna have 1 billion 75 as a loan, and so the valuation changed a bit as well. So that's why I think it could be this thing. So please go ahead and you can add the risk and maybe have the conclusion, and indicate why, for example, we choose to anyway buy anyway, and what could be the way to compensate or eventually hedge for the risk as we take the position anyway.
I mean, It's very true. Given the Dolan family's past actions, their history, we consider it highly likely that they will do something like that. Like remember, they when they merged MSGN with MSG, they faced lawsuits, and the primary allegation was that this merger was driven by the need to fund the Sphere's project, and they faced a lot of lawsuits when they merged them again, and we expect that they can do something like that to fund the London project. So there is that risk. But when we look at the risk reward profile of this project, I mean, like what we are paying for it, what we might potentially get from it, that the risk reward profile of this project is quite aligned with our own risk appetite. Given that there is no earnings history, there is a lot of risk, there is a risk of London project, MSGN, the Donald family. We should not guide anyone to invest more than like 3 to 5% of their portfolio. This way, they can mitigate the risk and they can participate in the upside potential of this project. And it is a beautiful project, guys. Uh, Anyway, like it doesn't matter how you look at it, what sort of analysis you guys do, asset value, earnings value calculation, even if you try to do some sort of DCF, you will get a beautiful upside on this project. And just like Antonio was saying that the initial forecast was like 1.3 billion. No one would have built this project if they were not expecting a yield of at least 5-6%. And at 5-6%, it's like it translates into an EBIT of like 60 to 75, $80 million of EBIT. And we are assuming an EBIT of just 47 million for the first full year. And the first full year will be the year in which they can make the best out of it, because there is so much hype. Everyone wants to go there. And at 47.2 million, our intrinsic value comes at around $41, which is just a 38% upside. But you need to understand the sensitivity analysis of this. We will give you a snap of the sensitivity analysis table in which we model the upside potential of this stock, of this project at different multiples, at different earnings, at different EBITs. So you can get a sense of what sort of upside potential you are looking at.
Yeah, we're gonna
And
publish this research on Seeking Alpha, so they can actually look at the numbers. You know, we think that between I don't know, $45 to $60, but then I guess we're gonna stay probably on the safe side
yeah,
and stay more towards the 45, 50. You know, it could be a good deal. So even if there is so much risk, if you take between 2 to 3% of the portfolio, the upside is so good. I mean, you can actually make two per easily on this project, and some people are actually even called three. In some cases, if EBIT to be over 100 million, like many forecasts, this obviously in the bullish case, this stock could be north of $75, and that would be a three per almost. You know, so you know, we understand why the market is skeptical. We understand that the market might have some rights to be skeptical, but we also know that a certain point when eventually the sphere will be open, you know, EBIT will be more clear. Eventually, in August, when there will be the new earnings, the market will also understand that there's more money. There was a Tau sale that is not reported yet. In the new cash position is not reported. They're gonna be more clear about the construction cost. You know, in our analysis, they can see we forecasted 100 million extra cost. You know, that obviously assumptions. It might be positive or negative. We're gonna see that. So, but when the market is gonna have all these more hints, and eventually, if the management would like to say something about the return to the shareholder or what they're gonna do about London or how they're gonna treat that, probably that could be actually a very good catalyst for the stock to look up. Guys, I think I hope you guys like the video and you can look our research on Seeking Alpha. I really want to thank Saqib and Eddie for the day, and we're gonna come up. It was easy to talk about this stock. It was not a complicated analysis. Usually we do a much more into depth analysis. Some of them very technical, but this one is quite easy to understand. Basically, asset value, you know, a deep value type of story. And we'll talk to you soon.